to reward on GJ. As always, to show your support to the channel, like this video, subscribe to the channel, and hit that bell notification to always be notified whenever we release a new video. Without further ado, guys, let's go ahead and get into the video. Step 1, you need a bias. A bias is essentially your direction. A bias is what you're going to use to understand where the market is going and why. So a bias can be simply understood as your order flow. You need to know your order flow. And in order to know your order flow, you need to zoom out. Because if you were looking at the picture that you're currently looking at right now, a lot of people may look at this and think that price is in a downtrend. So because you're too zoomed in, you can't see the full picture. If you actually just zoom out, you will very clearly see that we are actually in an uptrend when it comes to the order flow. So when it comes to step 1 and establishing your bias, you just need to understand what is the order flow. We have a low, we have a high, we have an equal low, we have a lower high, a higher low, and then a higher high. So between this low and this high, very clear that we have established that our order flow is bullish. So we're expecting price to continue because that is the direction that the algorithm is taking the orders. So step 1 is you must have a bias. And for this trade, our bias was bullish. Next is step 2. Step 2 is really about finding an area where you can actually trade from. So in order to find an area where you can actually trade from, you need to mark out your swing low, as we do right here. And then you want to go out and mark out your swing high, as we have up here. From there, you want to take the Fibonacci tool. You want to mark out the low to the high. And there you have the full fib extension of the price leg. Now, price needs to pull back into discount pricing, which means the lower half of the 50% Fibonacci tool. Right here is the 50%. So anything in and around this area is where we want to look to take our long trade from. Almost always, price will pull back into this 50% region. Step 3, you need to find a point of interest where you can trade from. What does that mean? Well, we know by now that we trade from levels of order blocks, supply and demand. So we need to find an order block that sits within the discount pricing of the price leg. So we take our 50% and we're just going to go ahead and mark out every order block that exists in the bottom 50%. That's an order block. This right here is an order block. This right here is an order block. And finally, this right here is an order block. Are every single order block going to hold? No, of course. And that is why we trade reactions. In order to trade a reaction, essentially we just need to drop down to the lower time frame and get the confirmation. Now, as it's just a rule of thumb, if this order block doesn't hold and this order block doesn't hold, that's okay, because we know that the likelihood is that at least one of the 4 order blocks will hold. And that's why it's okay to take losses. Losses are a part of the game. So if you're taking losses from any levels of order blocks and you're thinking order blocks don't work, it's simply because price was just going to use a different order block. That is totally normal. With the level of risk to reward that we get here, it's okay to take a losing trade here and there. So when you found your point of interest, you want to then drop down to the lower time frames, because essentially you need confirmation from one of those order blocks in the form of an order flow realignment. An order flow realignment, we use the 15-minute time frame. I'm just going to go ahead and pull price back so you can see this play out in live market conditions. You want to pull price back. We're on the 15-minute time frame, and we need to see an order flow realignment. Well, what is an order flow realignment, you may ask? An order flow realignment is where the internal trend shifts and matches with the external trend. So we know our external trend right now is bullish. The order flow is bullish. However, if you look closely at the 50-minute, you'll see very clearly that the 50-minute price action is bearish. Now we know that we tapped into our level of demand when it was here, right? Just to the left of us, we had the 4-hour order block, which we are currently sitting in right now. Then we needed to see an order flow realignment. Well, let's take a look at what that looks like. Here is a low, here is a high, here is a lower low. This is the lower low that taps into the order block. So we need to see the realignment, which means the high, which is this right here, that put in the low, which is this right here, needs to be broken. When that's broken, that confirms to us that there are more buyers in the market. So the likelihood is that price is going to increase. You must wait for that confirmation. Taking a trade before that confirmation is too risky, and the probability is it's probably not going to work out for you. But once it does, you have an option. Now you need to take a trade, and you need to take a trade from a level of demand. But in this scenario right here, we have 2 levels of demand. If you guys can notice those 2 levels of demand, well done. If you don't, here is demand level number 1, order block 1. That is called a decisional. Now that's called a decisional because that is the deciding level of demand that actually broke the high to give us our order flow realignment. The bottom level right here is called the origin. This is the original level of demand that created the impulse that order flow realigned from. In a situation like this, you can take both of the entries and just one of the 2 need to play out. Because our risk to reward, again, is so high, it doesn't matter if one of the 2 trades do not come through because the other one will. And if they both don't, that's also not a problem. That is just part of the game. When you're targeting a 33 risk to reward, there is no problem on losing a trade here and there. And if we actually just pull the order down to the exact order block, when I have just a bit of slippage underneath, you'll see it's 36 risk to reward. And then you want to go ahead and put your entry on the second level also, just in case the first one doesn't hold. Now, if that doesn't happen, we will come back to that one in a moment. But just for the basis, this is our decisional. This is likely going to be the first one that gets tagged in, if price, of course, does tag in. So then you just want to play price, and you'll see instantly price tags in, gives a great reaction, which is always a great sign. Price tags in again, pushes away. So at this point, you can clearly see now price is respecting this level and has now pushed away. At this point, I would be looking to move my stop losses to break even, or at least put in stop losses just below this wick right here and cutting out at least half our risk. That way, if this isn't the level that wants to hold and price comes down to take this one, at least we didn't lose the full 1 risk that we put on the trade there. Just want to go to the 30-minute time frame now because I want to speed some things up, but I want to show you something very, very valuable. I want to show you how you could have potentially scaled into a position. Now, you see right here where price tagged in and then give the reaction out. This is, as you will now know, a break of structure internally. This break of structure then left behind a level of demand. This demand zone right here, this level of demand right here, the sell to buy that initiates the level, that is a potential area to take another trade. Targeting where? The same place. So that is what we call a scaling. It's where you know that you are moving in the right direction with the market and you are looking to scale in to maximize your risk output. So I just want to play price out. Price taps into the level and gives another break of structure to the upside. Now I'm just going to go to the 4-hour time frame because essentially we're targeting the institutional liquidity level up here that's in alignment with the order flow. That's all we want to do. And when price hits that level, that is a full 1 to 36 risk to reward executed and a 1 to 15 on the scaling, totaling at over 50 risk to reward in 2 trades. Thank you guys for watching, and I'll see you in the next one.